Not going live on LinkedIn because I'm not important enough. Fair enough. Bollocks to you then. Remove that then. Remove that. Save changes. And we are live. So, welcome to the latest Moretti and a catch-up, back after a bit of a break. Following the conversations we had around asset finance with James Robinson and invoice finance with Ian Hayes, we thought the good thing to talk about now would be loan finance. And it was originally planned in because the CBILS scheme was coming to an end. And obviously that's backfired us. We got that changed yesterday. So I suppose you could say that we've landed quite well on that sort of point in there. So what we've got today is we've got Paul McPherson from JPM Capital with us, who's a trusted and great partner of Northern Accountants. So welcome, Paul.
Thanks, Phil. How you doing?
Good, thank you. Good, thank you. What have you got to drink today?
I've got a Quilmes Argentinian beer with me today, we got one of these gifts from a client of 24 beers from around the world, so I'll be making my way through that slowly.
I suspect you've got through a lot quicker than you normally would with it being all lockdown and things like that.
That's the problem, yeah.
Yeah, everybody's just been drinking more, but there we go. So, well, give you a little bit of background. Do you want to introduce yourself and JPM Capital so that people understand exactly what it is that you do?
Yeah, for sure. So I'm Paul McPherson, one of the directors at JPM Capital. It's myself and another chap called Jamie, which started the company 5 years ago or so. We operate as a brokerage intermediary, so we're middlemen, and we put clients in touch with funding and funding partners as they so need. And our main area of focus has been on unsecured loans. So we do anything from short-term funding for VAT and tax and insurance, all the way up to longer-term business development, cash flow, refinancing type facilities, and anything in the middle. And more recently, we've adapted and evolved and been jumping on the back of the government-backed CBILS schemes and helping clients get access to funds throughout this crazy period.
Yeah. So sort of pre-COVID, then, what is it? The sort of things that you guys were doing, really? What was the big driver in that sort of in your sort of world, really?
I think our core product has always been the short-term funding. So it would be things like your tax and your VAT and your insurance. And that's the main thing that we use, and we like to see ourselves as somebody who wouldn't come in and out of dealing with a client, and we want to build a long-term relationship. So that starts with doing the short-term stuff. It's not the most lucrative area in our industry at all, but we know that if we're looking after someone's VAT, which would be every quarter, for example, that we're then a trusted partner when they need something else. You know, if they need to refurbish their office, I'll speak to Paul. You know, if they need to buy out a partner, I'll speak to Paul, because, you know, we're dealing with this every month. We're speaking to them more or less on the short-term stuff. So that's been our core. But then I hate the phrase a one-stop shop. Absolutely hate it. But it is kind of what we've been trying to build. And we've been trying to build somewhere where, you know, if a customer needs anything to do with funding, they can speak to us, and we either can do it or we know who we can point them in the direction of. And that's been our main thing.
Yeah. I mean, that's it. Is that the VAT and tax shortfall? There's not many people out there that I actually think are aware that you can do those sorts of things in a lot of things. A lot of people sit and worry about those sorts of things. So to have somebody like you in the background is obviously is a great asset to many people.
It's taken a bit of education, that, and there's an old school and a new school when it comes to specifically VAT and in some cases tax as well. VAT funding is actually a relatively new product. I mean, I've been in the industry for 15 odd years, and it's only been really the last, I think, about 6 or 7 years that the VAT funding's been a thing. Before that, it was very much rebuffed by the funders. You've still got your old school bankers that would say, no, your high street banks, not a chance. They would say, no, if you're funding your VAT, you're in trouble. We know that's not the case. We know that's not true at all. VAT funding is a cash flow tool. I mean, if you think of most businesses nowadays, nobody invoices quarterly. And you know, everybody operates on monthly cash flow, but you're expected to pay a quarterly chunk. And then you take in businesses who might be seasonal by nature. And the way VAT's going to work is you're going to trigger a big VAT bill after a heavy period, which you might be going into a quiet period. So let's take pubs and restaurants, for example. You go through a busy Christmas period, you've triggered a big VAT bill, which is payable in February, your quietest period of the year. Well, it's not going to make a lot of sense for you to take that big chunk out of your cash flow. It would make a lot more sense for you to let the funder pay it on your behalf, and you can spread it over the following 3 months. And slowly, that concept has started making its way through into the mainstream, and people are starting to recognise that it's a valuable cash flow protection tool. And in some ways, everything that's going on with CBILS and the world in general, I mean, the world shut down in so many ways. And the first thing that businesses started thinking of is, how much cash have I got?
Yeah.
And that in some ways has highlighted exactly what we've been talking about for years, is that cash protection is key. And if you've got any kind of method where you can protect the cash within your business and manage your cash flow in an efficient and effective manner, then that's got to be beneficial. And when it comes to VAT funding, it's pretty cheap anyway. You're only talking for a decent business with very few red flags. You're only talking in the 3% range. Right. The reason why it's so cheap is because most businesses, once they start funding their VAT, will tend to keep rolling that over each quarter, because they know it makes sense and it ties in nicely with their cash flow. So they know, the finance companies know that long term on the renewals, they'll make enough money on it. But in the short term, it's a pretty cheap way of doing things. So yeah, that's been our core product, and we found, because it works so well, that then for us it just leads in nicely to anything else businesses might need.
I think so it's good to be able to the public. So if anybody is looking for that sort of stuff, just give us a shout. We can certainly make the introduction to Paul, because I know there's quite a few of our businesses who do use that sort of facility, and it works really well for them. So that's good. So okay then, so let's talk about the dreaded CBILS then. So the world ends. Rishi and Co, in their wisdom, announces this brilliant CBILS scheme. What happens to you guys? How does that affect you guys at JPM?
Well, we immediately wanted to get on board, and we did everything we could. It took us a while to get on board. It was the high street banks had the head start on everyone. They needed a head start, as it turned out, because they're so bloody slow. They're not geared up for doing this kind of thing and dealing with that kind of volume. They're still quite old school with your relationship manager, and I need to have a meeting with you to discuss this. Whereas most of the operational things we do now are on email or digitally, one way or another. But we're still dealing with the high street banks who are stuck in this. Need to go and speak to your manager, and these individual managers that are covering an area, there's no way they can deal with that kind of volume and scope. It was just completely impossible for them. So it started badly because of that. And then we worked mainly with the second tier funders, your non-mainstream banks. So the most famous one everybody knows is Funding Circle. We're a gold partner broker with Funding Circle, and put a lot of business their way. They're one of many funders that we use who have access to CBILS. So they were a little bit slower getting to the party. So we had to kind of wait in the sidelines. I think it was about 6 weeks or so. We were waiting for everything to get going, and it was a long wait. And to be frank, we had my business, I think, from March to middle of April, maybe nearly the end of April, had not a penny coming through the doors, not a penny, because nobody would fund anything else. No. And it was a worrying time for us, but we got behind the CBILS scheme eventually, once the funding partners that we work with started getting on board, and then it was just all hands to the pump, and it's been non-stop since then, just deal after deal. I think we've put out now 40 million in volume over just shy of 6 months. Yeah. So it's been a hell of an effort from the team here, and that's been my life for the last 6 months, has been CBILS, and they extended it yesterday. And
I was going to say, you'd be delighted.
Yeah, that's one word for it. I was ready for it to end, but at the same time, it's done for a reason, and And not every business who wants it has been able to access it yet. In fact, I think you put a couple to me in the last week or so that needed it, and we're working through them now. I think one we're pretty close on, another one we're not so far away on. So we know there's a lot of businesses out there who still have not had a chance to take advantage of the scheme, or maybe some who took the bounce back loan and then they thought that would see them through, but now, you know, the future's a little bit uncertain still. So maybe now we're thinking I could actually do with a bit of a more comprehensive facility here, which where the CBILS is going to come in to see people do this next as well. And actually, a lot of businesses don't understand that if they've had a bounce back, they can still take a CBILS. So that's, I think, an important message to get out as well.
Yeah, there was a lot of miscomprehension at the early days, wasn't there? If you had a bounce back, you couldn't have a CBILS, and then there was if you had a CBILS, you couldn't have a bounce back. But they changed the legislation all the time. I know people who have been sick of the sight of me on a morning, because we basically every time there was a Prime Minister's announcement, we was on a video trying to explain what it was, and you'd say one thing one day, and the next day you'd have to go back and say, you know what I said yesterday? Well, that was a right load of crap, because now I need to tell you this because they've changed their mind. So there's obviously yesterdays that I have to go out and talk about at some point, which I'm really, really not looking forward to, and I'm sure nobody else is, but we'll do it nevertheless. So do you want to just, from our point of view, articulate what the changes that they announced yesterday were?
Yeah, well, firstly, they've put an extension in which runs to the end of November. So we've got another 2 months now. So that's the main thing. The scheme, by and large, will stay the same. So it's the main thing is the extension. One of the things they did put in was the option to have the repayments run over 10 years instead of 5, and the option to restructure any current CBILS over 10 years instead of 5. This is going to be a bit of a misnomer, and this is going to throw people for a loop, because there's a definite disconnect between what Rishi announces as the scheme could entail and what will actually be brought to market by the funders, who have complete autonomy to operate within the parameters of the scheme on their own credit policy. Now, your main banks, and this probably applies more to bounce back loans, they'll allow that extension to 10 years. The high street banks might get behind it. The secondary market that we work in, I have severe doubts whether they would get behind this. I've already spoke to 2 of our funding partners. I won't mention names because I don't want to call anyone out, but I've been told off the record today on the back of this, we will not be offering 10 years, no chance. And actually, well, that's the right question. Why would they? It doesn't really make any sense for them to do so. The government doesn't offer a lot more backing than they already did. So it seems to me a little bit of a publicity stunt. Whether some of the banks get behind it, then maybe they will, but I know the banks we work with won't get behind that. There's not any great reason for them to do so. It's way, way out of their credit policy. In fact, to be honest, like, I work with 8 banks, secondary lenders, who offer CBILS. Most of them, the majority, 5 of the 8, don't even do the 5 years. One of them's at 2 years max. Most of them are at 3 years max. And one of them says they'll do 5 years, but every single acceptance we've had back has been 3 years. And they're not even doing that. The 5 years. There's only 2 of them that are consistently putting out 5-year acceptances. So the thought of them saying, right, we're going to do 10 years, it's just not going to happen. Yeah. So, and we've had a number of phone calls in the office today asking if people can restructure it at 10 years, and I've tried to explain this. I think this is going to be a common theme for the next month or so until people start to realise that. I mean, we'll wait and see what the funders, how they're going to interpret it and how they're going to implement it. But yeah, I'm not assuming that that's going to have a big change, that announcement.
No. What about the what is it? The pay as you grow scheme? Is that what they've called it?
Yeah, to be honest, Phil, you probably know more than I know on that one. So I don't know if you want to update me on that one. I spoke to my operations manager earlier about that, and I didn't have a good feel for it. What are you feeling about that?
The same as you, really. I think that I'm a big believer that the Chancellor is an excellent public speaker, and I think he's putting massive. There's no doubt they've done a lot of great work. There is no doubt about that. Let's put that out there. But I do think it's almost like a pre-pitch for the next Prime Minister's role. a lot of the things that he says, and there's a lot of publicity that goes in behind it, and it gets a lot of good press out of it. And then the devil's in the detail, and when you get to the detail, it's nothing like what he's promised or what he's suggested or indicated that might be available. So for me, yes, there's lots of nice things that's been out there, but I've got to wait for the detail that comes out. You know, everything that when he did about the furlough schemes, it was going to do this, it was going to do that, it didn't. When things were going to go live, it didn't. And it's a lot of, for me, it's a lot of things. Well, I've got to say something, so I'll say what I need to say, and everyone will love me, and I'll get all the plaudits all over the social media platforms, and then 3, 4, 5 weeks down the line, when everyone's forgot what I said, the people at the front line, so the funders, the accountants, the brokers, the bank managers, they'll get all the flack because we can't do it, and it looks like it's them that's not doing it. It's not me, because I've gone on record and said, look how great we are, and this is what we're going to do to support you. So
it's a catchy little buzzword, or buzz phrase, but I mean, I read it. It just seemed so generic. I'm exactly the same as you. I'm waiting for the details, because I'm reading that thinking, how are you going to practically implement this?
I mean, one thing I did like was the deferment of the VAT, where basically everyone was expected to pay a big chunk of that off back in March, and now they can spread it over 11 months. So I'd like to do that, but again,
I'm glad you liked it. I've been working with a funding partner of ours for the last 2 weeks. And we've been trying to come up with a white label bespoke solution for clients to fund their deferred VAT over 12 months. I've honestly put 2 weeks worth of work into this, and then announced yesterday, I went, can I swear on this?
Yeah, you can. He's a bastard. Don't worry about it.
Sick. But no, ultimately, yeah, you're right. It's good for businesses. It's a good move. I think what was missing, what I would have liked to have seen, with the CBILS scheme, you're limited to 25% of turnover. And I understand the origins of this, because when that was put in place, we didn't really know how long this virus was going to impact our economy and the businesses, and 25% seemed like a reasonable number. But now, we're only 6-7 months in, and he's talking about another 6 months of this. At what point are we saying, why can you only borrow 25% of your turnover for a virus which is going to affect us at least for a year and probably longer? And I was hoping that they would have done something there, because a lot of businesses have taken a CBILS so far, and they've taken the 25% of their turnover, and a lot of them have actually eaten through it already. And that's where our limitation is at the minute, where we're capped, and we cannot get anybody any more than the 25% of the turnover. That would have been one that would have been received very well. And that's very restricting at the minute. But maybe I have heard from a funder that is on the agenda, but it didn't come up at all yesterday.
Yeah. Needs to be looked at. People need that increased support, because this isn't going away. There doesn't seem to be any way out of this at the moment. And Leeds has just been put back into lockdown today, so we've now, from midnight tonight, we're now in a local lockdown like the rest of Yorkshire. So just come out literally about 15-20 minutes before we came on sort of live, really. So so that's interesting. So it's not going away, and it was always going to happen. As soon as we locked everything down, we flattened the curve, and then as soon as everyone got back out, there's no cure. So what's going to happen if it was spreading like wildfire before? Nothing's going to change. It was always going to be the case, and the difficulties that the schools are experiencing. We've been through it, where my little boy had a cough on Monday, went to a doctor's. It's not a problem. He's just got a chest infection. It's not COVID related sort of symptoms. Go back to school. Yeah, can't come back to school. You need to test. Can't get a test. And then fortunately, we managed to get one, and he only missed 1 day of school. But I've seen people, and some of the guys that I know, they've been waiting 3, 4, 5 days to get a test booked, and then they've got to wait for the results. So before you know it, you've self-isolated for 2 weeks anyway. So
I've had the exact same yesterday. My nephew, he's been sent home from school, and he's got his brother and sister in the same school. They got rounded up and taken home. You all need to leave.
Yeah, they rang my elder. Ridiculous, absolutely. But I understand it to a degree. I can start ranting about this because I've had a run-in with them, but there you go. Never mind. It was one of those.
We're going to get political here quickly, but I understand that, I do, but I think it's overkill because there's the fear factor, and there's autonomy within the schools to deal with that differently. I don't think they've got a lot of directive. My wife's a high school teacher, and well, all her family are. Her sister, her brother, are high school teachers, and so they're all. I'm getting all the stories about what they're being told, and it's all different. They're not getting any like consistent advice because they've left it to the schools to kind of follow these vague guidelines and then implement them as best as they see fit. So then all you're dealing with is, you know, Mrs. Jones, who might just be particularly scared about it. And that's where it's happened with your son. And they said, right, no, he's not coming back until he gets a test because he had a cough, which, by the way, of course they're going to get coughs at this time of year. You know, the weather's changing. All the kids are now mixing together again where they weren't mixing before, and their immune systems are doing this. I got a cold a couple of weeks ago. And you get everybody going, oh, is it cold? It was clearly a cold. I had a bit of a cough in my throat.
Yeah.
And I just sent my daughter back to nursery the week before. I'm like, of course I'm going to get these germs.
Yeah. They're just manufacturers out of the kids. So anyway, we've digressed. Yeah. So I wanted to just check with you. You've talked about the CBILS and the changes to that. Has the bounce back loans been been extended as well?
Yes, bounce back's been extended. I'm not involved in bounce back.
No, you're not involved in it, but you're in that sort of market, which is great. So with
they have been extended, yeah.
Yeah, with the extensions and the changes and things like that, what opportunities do you think are out there for businesses?
I think that obviously it's industry specific. Every industry is dealing with their own issues, but you know, specifically talking about funding, we are trying to work within the government-backed CBILS schemes, but also move things along to a little bit more of normality and traditional funding. And we know that there are opportunities. We are beginning to see businesses closing down, which you hate to say it, but it does open up opportunities for other businesses. You know, we've actually been dealing with a couple of management buyouts recently, and funding those because, you know, if a big fish might have a more of an opportunity to take on somebody who's struggling, and unfortunately that's just the way it is at the minute. So there's going to be those cases around, and you know, where competitors fall down, there's always going to be opportunities. So we're seeing a little bit of that at the minute. It's not a particularly nice thing to talk about, but that's just the reality of the marketplace at the minute. And the general funding market still exists as it was before. So you can still access funding for anything, as we talked about, all the short-term stuff, your VAT and tax. But the longest-term stuff like equipment funding and office refurbishments or office relocations or management buyouts and all these different kind of things that you would consider growth funding. If you break down what we do, it usually falls into two categories. It's either cash flow funding or growth funding. Businesses struggling with cash flow will help with one thing or another. Business wants to grow, will help with one thing or another. And that really is where we come in. So there are opportunities for growth funding at the minute. And the funders are there. They're actually keen because most of them had expected to see really, really bad levels of bad debt. And that's where all the forbearance came in, and they were obliged to offer various levels of forbearance. And what's happened is that the bad debt levels have not been anywhere near as horrific as they thought it could be. So the lenders are now sat with, they've not been lending, by the way, they've been sat on this money, and the money's been coming in. They now have bigger pots of money than they've ever had. I've had these conversations with funders, and they're saying, we've got more money now than we've ever had, and we need to get it out the door. So we're trying to get a message out there to people that, you know, if you want to grow your business, now's a good time. You might get preferential rates. We're getting good decisions. Now might be the time to get, you know, the new office premises, or to buy out that partner who's been a pain in the ass and not pulling his weight. You know, there's lots of opportunities there.
Yeah, absolutely. So good things for people to think about. Like there, of every cloud has a silver lining, so to speak. So do you think? So obviously CBILS and things like that, and the loan structures coming for a lot of criticism with it being slow and laborious and with very, very low acceptance rates. Do you think anything's going to change on that front, or
no? It's not great, and there's no fluff in that. You know, I'm not going to put lipstick on a peg on that one. It's not good. The banks have been particularly bad, and the banks have been slow and laborious, as you say. and they've dragged it. I've spoken to people who've been waiting for 2 months for feedback from the bank and still nothing. And that's not going to change. They're not, as we said at the start, they're not geared up for that. With what I do and the people I work with, I'll be completely frank, our acceptance rates have not been anywhere near as good as what we would have hoped. I mean, if we'd have had even 50% acceptance rates, we would have been flying, and the whole industry would have been flying. We're not near that. We're about half of that. We're about 25 to 30% acceptance rates across the board on applications. Now, the actual results are much higher than that, because if you put it on a per client basis, we're at about 60%. The reason for that is because we have more options.
Yeah.
So whereas if you go to your high street bank, it's a yes or a no, and that's it.
Yeah.
If you come to me, I've got 8 different funders I've got access to. Now, I've got a less than half a chance that I'm going to get accepted from funder A, funder B, funder C, but by the time we work down through the line, we've got a more than 50% chance, or about 60+% chance that we'll get something. That's not going to change in answer to your question, but we've got the options, which gives it a fighting chance, as opposed to waiting 2 months for a 80% chance you're going to get a no.
Yeah, exactly. One of those things. And like you say, the other funders, are not going to necessarily come to the table in any different form to where they were at because of the changes. They've just got a bigger window to go back to what they were originally offering anyway. So there's some positives on it, but yeah, chances are your second tier lenders and they're not going to go to 10 years, are they? They're just not going to do it, but they will still offer for the 7 potentially, or maybe the 5 or the 6 or whatever it is. If they were doing it before, they've just got a bigger window to do it now, haven't they?
That's the hope. The hope is that there'll be some middle ground that they'll find, but the government has to incentivize that. At the minute, devil's in the detail, but it's easy announcing that's what they're going to do, but where's the incentive for the funders to do it? So I have to see what the government incentive is behind it, because at the minute they've only got 1 year's worth of interest that they pay. I say only. I mean, it's a hell of a project that they've undertaken. The government, taking on 1 year's worth of interest for this amount of business is an unbelievable undertaking, but it is only 1 year. When if you're talking about 10 years of a loan, they need to do more. Otherwise there's no incentive.
Yeah, absolutely. So that's good. I mean, so okay, I think we've kind of talked CBILS and bounce back loans and Rishi to death. So the other things you've kind of touched on, you mentioned a couple of times about that sort of commercial property and stuff like that. Now, there's in the residential market, there's obviously a bit of a boom because of the 3% stamp duty that's been eroded. Do you anticipate that's going to come into the commercial property market as well? And can you support in that sort of area?
I'll be honest, Phil, this is my area of expertise, so I'll be pretty limited on my answer here for you. We outsource our property stuff, and I use a trusted partner myself for the property stuff. In my limited knowledge and experience, I haven't heard anything that would be extended into the commercial sphere, but it's not my area. I wouldn't profess to know too much about it, to be honest, mate.
Sorry for throwing
Throw away. I mean, I'm happy enough to say when I don't know something, I'm not going to flag it.
It's the best way to be. If you don't know, you don't know. But the great thing is that, like you say, you've got a partner who will deal with that for you. Just like us, I'm no funder. I don't know how to get things through a funding partner.
You don't expect it.
I come to you. I know who to speak to, so I come to you. So it works in that kind of way. So that's really good. So is there anything else that you touched on, obviously the VAT and tax and things like that, and the short-term fund? Is there anything else that you particularly specialise in, or particularly like, and have got an appetite for? And especially at this moment, is there anything else that that people might want to considering?
Yeah, well, I mean, this is maybe a little bit self-indulgent, but we as a company have been going through an enormous project for the past 18 months. We've been working with the FCA to extend our permissions from broker to lender so that we can lend our own money. And well, you wouldn't believe it, but we kind of made our headway in March of 2020. Now, I don't even think I've told you this, to be honest. We kept it very, very quiet because we had such a limited pot of money, such a small funding operation, that we really kept it only available to existing clients who we found were in distress, but that we believed would be okay with a bit of funding. And So it's been a very, very small operation since March, but we've been able to help some businesses through that. But the interesting thing is that we've now taken a meeting just this last week, and it's yet to be announced, so I won't go into details, but we've taken on a block discounting investment. It's going to be a couple of million, and it just puts us into a different stratosphere in terms of what we can bring to the market. So we're going to be putting out some funds ourselves, as well as operating as a broker, as we traditionally have. We're going to be lending our own money, and that just opens it out a lot wider. And the goal is to be helping businesses in the short term and growing our book as much as we can. So we're very, very new players in the market. We were the newest players in the market as soon as COVID hit, which was brilliant. As every single funder was pulling out of the market, we were popping our little streamers and saying, right, here we go, we're here to lend. And we're definitely doubting ourselves when half of our funders pulled out and said, we're not lending right now. But we've seen through this little period, and I think now the next little while we're going to be growing that. So that's a kind of a little selfish plug, but we'll be probably more to follow on that once I've got a bit more to announce. But
absolutely, make sure that all that as well. So that'd be great. So I'm kind of coming to the end of where I wanted to get to. Really, I've covered the big things. We've talked about the CBILS, we've talked about the bounce back loans, we've talked about opportunities, we've talked about risks, we've talked about putting into reality what the announcements were, which I think is important for people. So is there anything else that you particularly you think that we should talk about, or anything like that?
No, I'm good. I think as you say, we've covered it. I've managed to avoid you plugging Holbeat and Leeds, so we're I think we've done all right.
Need to come out with COVID so far is Holbeat Leeds. That's what it says in the record book. Inside, and they don't care. It's the cup. I've heard all the excuses. It says Hull City beat Leeds in 2020, so that will do for me. That'll do for me. So, have you got any final advice before we go on to before we wrap up? To anybody else listening in terms of
no, I mean I think this is a really good thing that you're doing and getting information out for people. And I think the best advice that any business could take on is speak to your accountant. And if your accountant is not acting as a business advisor, then you need a new accountant. The best accountants are doing exactly what you're doing. The days of here's your accounts and your tax returns, they're dead. And if any accountant's not caught up to that, then you need a new accountant. And we know that's what you guys do, and that's what all the best accountants are doing. And if you're not getting advice off your accountant, you need a new accountant.
Brilliant. My money over to you. Much appreciated. So, all that really left me to say, Paul, is thank you so much for giving up your time. I know you're a busy man. I know it's Friday afternoon. I know you'll be inundated with following the announcements yesterday. So I really appreciate you sticking to your commitment to come and talk to the clients and Northern Accounts and our contacts. So much appreciated. I hope you have a fantastic afternoon. I hope you have a great weekend, and I look forward to speaking to you soon.
Try to Phil. Speak to you soon, mate. Take care.
Yes,